for institutions who have been holding back. Now, we've had a big anticipatory move here. It wouldn't be surprising if we saw a sell on the news. That's an expression in the market. Sell, you have a lot of anticipation, a price moves up, the event happens, and then especially fast trading organizations sell on the news. But beyond that, that I think will be just maybe a very short-term phenomenon. I think that the institutional push into Bitcoin will be quite significant to the price. In fact, in our price expectations going forward, the biggest contributor.
A spot Bitcoin exchange-traded fund approved by the U.S. Securities and Exchange Commission in 2 weeks may transform the digital asset environment in and out of the U.S. ARK Invest CEO, CIO, and founder Cathie Wood says the January 10th deadline is more important than most people assume. The SEC advises candidates to prepare everything by January 10th or face rejection by other applicants. BlackRock, Fidelity, ARK Invest, Vank, Bitwise, and other Bitcoin startup applicants will likely be accepted by the regulator. Cathie says January 10th clearance is 95% certain. On CNBC, the famed hedge fund manager highlighted Bitcoin ETFs and their impact on the crypto market. Cathie believes this will be the start of a lucrative age for the sector, moving us from ordinary investors to global institutional investors' top picks. We'll now show portions from Cathie's interview as she addresses applicants' SEC negotiations, institutional investor interest, and her industry outlook for 2024 and beyond.
Yeah, I guess the biggest controversy, and this is in the press, but I'll highlight it because I think for most of us, it has been, wow, are they going to allow in-kind transactions? So, limiting the tax impact of transactions, or is it going to be primarily in cash? And I think, as has been reported widely, I think it's cash, not in kind, at least at the outset here. And I think there are just a few people within the SEC who are just somewhat concerned that banks will be forced to touch crypto. We're not sure they will be, but we're talking about something very technical. So to answer your question, yes, very technical. But that has been, I think, the big issue as we head hopefully towards a resolution. I do think there will be repositioning for all kinds of reasons, but I do also believe that the SEC approval will be a green light for institutions who have been holding back. Now, we've had a big anticipatory move here. It wouldn't be surprising if we saw a sell on the news. That's an expression in the market. Sell, you have a lot of anticipation, a price moves up, the event happens, and then especially fast trading organizations sell on the news. But beyond that, that I think will be just maybe a very short-term phenomenon. I think that the institutional push into Bitcoin will be quite significant to the price. In fact, in our price expectations going forward, the biggest contributor is institutions. As they move, they don't have to move very much in. They can move, there are trillions of dollars in assets to be allocated. If they just move in 0.1%, forget about 1%, but even 0.1 or 0.2%, that will move the needle, especially as we know, the number of Bitcoin outstanding right now is about 19.5 million. And the further that number, the furthest that number is going to go is 21 million. So the scarcity value as institutions move in will begin to move the price, we believe.
As Cathie said, ARK wants to offer a range of new crypto-based exchange-traded funds, starting with their spot Bitcoin ETF. While the SEC continues to worry about things like creating in-kind or cash, recent reports show that regulators in other countries are much more open to the cryptocurrency industry. Hong Kong's financial regulator has published rules for spot Bitcoin ETF issuers that allow the use of both cash and in-kind creation models. This is despite the fact that the Hong Kong Securities and Futures Commission is thought to be more strict on cryptocurrencies. The SEC, on the other hand, insists that Bitcoin ETF applicants in the US can only use cash creation models. During the meeting, Cathie also talks about how her company has decided to sell off its GBTC holdings on Thursday. Bloomberg analyst Eric Balchunas said that ARK Invest had sold all of its remaining Grayscale Bitcoin Trust GBTC holdings, which was worth $200 million. The investment company used $100 million of the money from the sale of GBTC to buy Bitcoin Futures ETF BO.
As with any new ETF, it takes a while to educate investors, asset allocators, advisors about these new offerings. So slow as it goes, but the most important thing that's happening right now is, we're watching the plumbing, and the plumbing works. That's extremely important. 21 Shares is the largest pure play ETP crypto provider in the world with roughly $2 billion in assets. So that has been mostly in Europe. This is in the US now. And so we wanted to make sure the plumbing works, and it's working beautifully. And I do think that a spot Bitcoin ETF will stimulate, once institutions and other investors have a toehold into the space, they will want ways to diversify. And so we wanted to be ready with those 5 strategies to help with actively managed diversification strategies. Some are lower volatility, some are more diversified with digital asset equities. So again, we're trying to be, shall I say, a go-to for anyone thinking about investing in digital assets. If you, I'm going to go back to what I mentioned about institutions. Institutions don't want to bother with custodying and so forth. They want and tax issues and other infrastructure. They just want to be able to access quickly Bitcoin and other digital assets if we think longer term. And so if we're right, a spot Bitcoin ETF will be the most liquid way to access exposure to Bitcoin. And I think that liquidity and the ability to move in and out quickly is going to be important to institutions, because some institutions, yes, will be buy and hold. Others will use the ETF really as a way to play a new asset class. And they'll want exposure at times because the diversification increases risk per unit of, increases return per unit of risk. So I think they can't ignore it. And so this is a very good way to access it. And this is portfolio management, essentially. So we've had both appreciate quite dramatically this year. This has been the best performing asset by far this year. And we always do take profits. It's just simple portfolio management. On top of the actual price appreciation of Bitcoin, we've had the discount closing relative to NAV for GBTC. So that's been, a double impact in terms of appreciation. So it's just traditional portfolio management. Will continue to inform investor decisions. Bitcoin appreciated during the regional bank crisis. So as the KRE, the regional bank index, imploded and Silicon Valley Bank went under, Bitcoin appreciated in the middle of that crisis roughly 50%. And so we have a new role for Bitcoin, and that is not only a risk-on asset, but a risk-off asset too. Think about that. And why is it? It is because Bitcoin, unlike our banking system, does not face counterparty risk. It is completely decentralized and transparent by wallet address, right? And so our on-chain analyst, David Puel, can watch the network all day long and see movement and spot unusual activity. And we certainly saw that last year as Celsius was going under and others. It was Bitcoin that didn't skip a beat. So I really think it's proved its mettle. And that is informing institutions. You know, they may not have liked it at one point in time, but that regional bank crisis spoke volumes. Now, so we look at Bitcoin as a hedge also against both inflation and deflation. So think about that. We have a risk-on asset and a risk-off asset. It's a hedge against inflation, much like gold is, because its quantity is fixed out there. And then it's a hedge against deflation because of this notion of counterparty risk, not subject to it. So it's going to play a lot of roles in a lot of portfolios. And, you know, our forecasts are over 5 years, and over a 5-year investment time horizon. We do think that it will, for some people, take the place of physical gold. So that's a big mover. We also, as I mentioned, institutions will start with 0.1, 0.2, maybe going to 5% if our analysis is correct. That's what usually happens with a new asset class. And then we have the emerging markets. If you noticed, El Salvador and now Argentina, both of the presidents of those countries are supporting Bitcoin. And why? Because they've watched themselves and their populations, their purchasing power and their wealth being destroyed by bad monetary and fiscal policies in those countries. And that's not just true of those two countries. It's true elsewhere in the world. So we would not be surprised to see Bitcoin become legal tender in many more emerging markets. That will be another very big use case. And then related to that somewhat is remittances. You know, it's easy to transmit once people have wallets and understand how to do it. Bitcoin for little or no charge at all, whereas going through Western Union can cost 8%, 10%, 23% in Nigeria of even $100 as families in the US try and transmit or remit funds back to their families in emerging markets.
In the interview, Cathie talks about the chance that the SEC will approve other crypto-based ETFs. According to the CEO of ARK Invest, blockchain networks like Ethereum and Solana are very hopeful because they are smart contract networks. Cathie thinks that smart contracts will become more important as decentralized finance grows. She also says that both are winners and will do great things in the next crypto boom. Bull Run and beyond, what did you think of Cathie's interview? Please leave your thoughts and comments below. Also, make sure you like this video, subscribe to the channel, and turn on post alerts to see more videos like this. Thanks for watching.